Most startling takeaway from this report is that the percentage of used cars being traded in with negative equity values, which means that dealers, lenders are willing to accept an immediate loss for new transactions, continues to rise and currently stands at an all-time high of 32.4%. Now, when we go back to the financial crisis of 2008, 2009, 2010, and we know the financial crisis never really ended. They just created this illusion. I mean, this is up from 20% back in 2009. It is now up to 32.4%. I mean, think about this for a second. And every time we look at these statistical numbers and we compare it to the financial crisis, we're not better off, we're worse off. Now, if we remove a lot of the manipulation from GDP numbers, from the unemployment numbers, we still see the same thing. We see that these numbers are much, much worse than when they were in going back to the financial crisis. When we look at the stock market, we can see that this is completely manipulated. We showed that the central banks, they're purchasing a whole hell of a lot of stocks to pump it up. We know there's the plunge protection team. We know there's ways that they can push the market up. And when we strip all that away, the market cannot stand. It will not sustain itself. And when we look at this, we can see that the average balance of the negative equity also continues to rise and stood at a record $5,130 last year, up over a quarter from $4,075 a decade earlier. Now, there's more. And when we look at this, we can see interest rates, well, they've come down since 2011. And the prices of used cars, they have increased. They've gone up around $2,800 on average. Now, as we can see, the prices of used cars have gone up and interest rates have come down. But interest rates, even though they're at, basement levels here, they're very, very low, it's not enough to offset the 2,800 increase, which we're seeing because the US dollar is losing value, which means it takes more dollars to purchase the same exact item. I mean, the item hasn't really changed. It's the value of the dollar. And what we're seeing right now is that companies, finance companies, they're making riskier loans to keep up revenue as vehicle sales slow. And here's why. The record percentage of underwater loans on trade-ins suggests that car owners are trading in their vehicles sooner than they had previously. A consumer is often the most underwater on his or her auto loan in the first few years of ownership because the value of the vehicle drops fastest over that time. For borrowers who do trade in their underwater cars, lenders are essentially giving them the money to pay down their loan. Now, the dealer sells the used car, and whatever balance remains on the old loan is folded into the new loan. The borrower might get a longer term loan than he or she had before to help keep the monthly payments manageable. That means that the loan balances are getting bigger relative to the value of the new car, and the debt will be paid off slower. Now, Moody's, they came out, and analyst Jason Grotowski notes that growing proportion of underwater trade-in means that at least some borrowers are getting deeper and deeper into debt with every car they buy. This was created, planned on purpose. Think about it. Think about what has happened over time. There was a time where you went out and you purchased your car with cash because the value of the cash that you had back then when we were on the gold standard, even though the central bank was in place, it held its value. And you were able to go out and purchase that car. Then what happened was, during the 70s, we came off the gold standard, and the central bank started to create currency like crazy. The value of the dollar decreased. And it meant that you needed more dollars to pay for that car. Now, they realized that people couldn't pay for that car because the value of the dollar has been lessened and it takes a lot more to purchase that car, so they had to come up with financing. And we saw that throughout the 80s. Then fast forward to 90s, late 90s, well, financing wasn't good enough because the payments were too high. The value of the dollar was decreasing so quickly that people couldn't keep up. So they had to come up with renting, which they call leasing, where you actually don't even own the car. You're just renting it for a period of time, and then you return it. And they only charge you for that value of when you are using the automobile. That's really what they're doing. And what we're seeing right now, that this has been planned from the start. And now there's no way out. I mean, they're trying to come up with different programs where, instead of leasing a car, you'll just call up and say, all right, I need the car for the afternoon, and you'll pay for that afternoon and you'll be able to drive the car. It's almost like renting, but GM is trying to put this into place where it's like it's like a lease, but only for a day, a week, or something like that. And what we're seeing right now is that these underwater trade-ins are just one of the many facets of a deteriorating U.S. auto market, which has been slowing down in the past year. And in 2017, new vehicle sales fell by 1.8% to 17.2 million in 2017. This is the first decline since 2009. And at the same time that this is all happening, delinquencies, they're soaring. And they're soaring for subprime auto loans, because what has happened is they brought in all these subprime people because there were no people left with good credit to sell these automobiles to. So they had to keep the thing going. They had to bring in subprime people. So if you had a heartbeat, you can buy a car. But what happens is they really didn't do any checks, and these people can't pay for their automobile. And these loans are becoming delinquent. We're seeing a lot of repossessions and things like that. Now, if we turn toward pensions right now, pensions, they are in a lot of trouble, and especially out in Illinois. And many states have this same problem here. Now, for those who are unfamiliar, here's a recap. Illinois is drowning under a mountain of debt, unpaid bills and underfunded pension liabilities, and its largest city, Chicago, is suffering from a staggering outbreak of violent crime not seen since gang wars engulfed major cities from LA to New York in the 90s, while rising taxes have prompted a mass exodus, with a state loss of one resident every 4.3 minutes in 2017. Now, what they're proposing for the pension problem is a mind-blowing $107 billion in debt, a never-before attempted amount in the world of munis to fund the state's insolvent pension system, which would also assure that Illinois would default even faster in the very near future. Now, Illinois lawmakers, they are so desperate right now to shore up the state's massively underfunded retirement system that they're willing to entertain an eye-popping wager, borrowing $107 billion and letting it ride in the financial markets. Now, if that number seems kind of large here, it's because it is. An offering of this size would be by far the biggest debt sale in the history of the municipal market, an amount to roughly 50% more debt than bankrupt Puerto Rico accumulated in the run-up to its record-setting insolvency. Now, let's put all this into context. Illinois had $26.3 billion of general obligation bonds as of July, and the state sold $750 million bonds in November to pay down unpaid bills that had accumulated during its 2-year budget impasse. The state still has $8 billion of unpaid bills even after that issuance. Now, Illinois, they have nothing to lose, so they're going really, really big. So big, in fact, it's never been seen before. What is just as shocking is that not even the $107 billion, that wouldn't even be enough to fully fund the Illinois pension system, which owes $129 billion after years of failing to make adequate annual contributions. So Illinois, they are in a very tough spot, and it's not just Illinois. There's many, many states that are in trouble like this. And if there is a hiccup in the system, if the market comes down just a little bit, well, this whole thing is going to unravel. I mean, this is just unbelievable what is happening here, and they realize it, and they're risking everything. This is almost like the Swiss National Bank, where they've been purchasing the stocks in the United States to prop up the equity market. If there is a small hiccup, if something happens, guess what? Everything just starts to fall apart. It's like a domino effect, and they won't be able to stop it. Now, We talked about the crypto ruble, where the Russian parliament, they're voting on this crypto ruble bill that was submitted to parliament. And what this means is that Russia is heading towards a digital currency where there'll be no cash, nothing like that. And maybe going forward, this might turn into the official currency of the country. And what we're seeing is that this bill that they put forward, this will allow the cryptocurrency to be used by every single person. But again, it's the crypto ruble. It's controlled by the government. It's not a free and open currency controlled by the people, as we can see yet, because right now, according to the bill, financial transactions involving the cryptocurrency are to be taxed at a rate of 13%, applied to any appreciation in value, or 13% of the total if the owner can't explain the source of the digital coins. The crypto ruble will also be promoted for circulation on international markets, according to the Russian Deputy Minister of Economic Development, who stressed that the crypto ruble is designed to become Russian digital money in the light of the digital economy. And we can see that probably many countries are going to be moving into this arena. Now, the question is this controlled by the people? Is it controlled by the private Western Central Bank? Russia, don't know yet, because what we do know is that Putin has taken control of the private Western Central Bank and has taken it away from the Rothschilds. I mean, Iran, same thing. The Rothschilds do not control their central bank. This is why they're the enemy. This is why Russia's the enemy. Any country that doesn't have a private Western Central Bank becomes the enemy of the cabal, becomes the enemy of the private Western Central Bank, the Rothschild private Western Central Bank, because they want everyone to submit to them. They want their bank in their country. Now, Russia did have the bank, but Putin took control over it. And since he has done this, and Iceland kind of taken control, they put a lot of bankers into jail, and their economy is flourishing right now. But of course, the corporate media doesn't like to report on that. The bankers tried to take down Russia with lowering the oil price, and they thought, oh, we'll be able to do this. But guess what? They couldn't do it, because once you get rid of the central banking system, your economy booms. Now, since he has done this, foreign debt fell by 75% in Russia. Inflation rates have decreased from 36.5% to 2.5% by the end of 2017. The total value of assets of the Russian banking system has risen 24-fold to 1.43 trillion. Capitalization of the Russian stock market has grown more than 15-fold to 621 billion. Public debt and foreign reserves, well, it looks like when Putin was elected in 2000, Russia had just 12 billion in reserves, accompanied by a public debt which was almost equal to the country's economic output of 92.1%. Things have changed, though, in 18 years. Russia's public debt has now shrunk to 17.4% of GDP, and reserves have increased to 356 billion. And what we're seeing right now is that once he took control of the private Western Central Bank, he was calling the shots. The central banks were not. Their economy started to boom. If we can get rid of the Rothschild banking system and create currency without interest attached, you would see countries really do well. Anytime a country wants to get out of the private Western Central Bank system, they automatically become the enemy of the Rothschild banking system. And all of a sudden, they're demonized. They call them dictators. They do whatever they have to make sure that the world knows that we're going after them, and make the people believe that they are the enemy. They're the scary country. And that's what they have always done. And they're still doing it. So if we got rid of the central banking system and we took control of the country once again, like Andrew Jackson did, our lives would be so much better. And this could be the plan, because as we know, Trump has Andrew Jackson hanging in the wall.